Hello and welcome to today's webinar. My name is Sabrina Wasden and I'm the marketing specialist here at ABG Rocky Mountain. And before we get started, let's make sure that the audio is working. Please comment in the chat box if you can hear me. All right, so if you can hear me, it's super helpful just to know that the audio is up and working. The chat box is on the right side. All right, well.
We will assume that they can hear.
Yeah, I guess if there are any concerns, feel free to type them in the chat box. But I think we're going to get rolling. Awesome. Okay, and then the second order of business before we get started is if you have any questions, please type them in the chat box and we'll address them at the end. So today we'll be learning from Larry Solomon about managed accounts. Larry is the president of ABG Consultants and has been in the retirement space for 19 years. Now over to you, Larry.
Thank you. So managed accounts is become a something that's been growing in popularity over the last few years, and has become almost a necessary part of an advisor's portfolio and what they can provide to their clients. What we're seeing is that probably within the next 5 or so years, an advisor who does not have a managed account solution will probably be behind the curve a little bit. And so from ABG's standpoint, we do provide 3 different ways to get managed accounts, and I'm going to be discussing our in-house way of doing it. By no means is our managed account solution an all-encompassing solution that will fit every need, and so please review the different managed accounts that are available and make your decisions. So what we've done is the managed account solution through ABG it can either be a record-keeping solution or an advisory solution through our advisory arm, ABG Consultants. And the advisory firms can customize their own glide paths in using the managed accounts, and which will help them to meet their unique needs. New managed accounts become yours, and that's one of the things that we like about our offering, is that it becomes yours, and your methodology and philosophy will not be used with any other advisory firm or client. So basically, we can custom make your glide paths and custom make your risk tolerance questionnaires. So you as the advisor, you act as the fiduciary of your own managed account solution with no third-party advisor agreement needed. So if you choose to use our record-keeping solution, then it becomes your solution. You become the advisor of record on those managed accounts. ABGRM then has created the technology interface, which would be customized for you as the advisor. And then the fees that will be charged will be a record-keeping fee rather than an advisory fee. And it will be customized based on the size and the scope of your engagement with us. So depending on what your needs are, that will determine what the cost is. One of the big key things in doing this is we want to be able to keep costs down, keep it as low as possible. So making it a record-keeping solution where ABG Rocky Mountain is not a fiduciary on this product is the best way to do that. However, if you are an advisor who is looking for an off-the-shelf managed account product, that's also available using our collective funds and also using our glide paths that are currently built. And so there is an off-the-shelf product available, and the cost is fairly inexpensive. At I believe the highest cost is 25 basis points. So the glide path, what that does, it helps take retirement plan participants to or through retirement in a smooth transition from an aggressive position to a conservative position, depending on their age and their investment allocation. ABG will work with you to create a custom glide path that matches your own philosophy as an advisor. The glide path uses your model portfolios to create a perfect mix of equity and fixed income. And then the glide paths can be adjusted from time to time if they're deemed too aggressive or too conservative, but it will be across the total book of business. We're not going to do that client by client. And so one of the beauties of using the managed account solution is traditionally we've always had to use either target date funds, which clumps every 35 or 45 or 55-year-old into the exact same mix of mutual funds at the exact same allocation, or you have to use risk-based models, which segregates people based on their risk tolerance. The beauty of the managed accounts is that it combines both worlds. It takes your risk tolerance and places you on one of 11 different glide paths that again are customized by you, the advisor, and over 900 different points of entry. So the participant takes the risk tolerance questionnaire. They receive a score of 0 through 100, depending on their answers. And you can see over here on the chart, it kind of shows if they score, for example, let's say someone scores a 35, they will be given a plus 2 years to their age. So a 50-year-old would be invested as if they were 52 years old, instead of a person who's 50 years old and scores a 75 would be invested as if they were 47 years old instead of 50 years old. So the score translates basically to a pre-built glide path that ranges from the plus 5 years to minus 5 years. The glide paths are then set from a maximum of 100% equities to 100% fixed income based on the upper and lower constraints determined by the advisor. So an advisor can say, I never want to see 100% equities or 100% fixed income. That's totally customizable, and the advisor can set those constraints. The person is then dropped on the glide path at their current age. Each birthday, the individual is moved more conservatively along their glide path. And then each birthday, a custom email is sent letting the participant know that you are managing their account and that they were just moved along the glide path. And it'll give them a call to action to review the risk tolerance questionnaire again. So, as I mentioned before, with 11 different custom glide paths, we can create 913 distinct starting points. And then this is kind of a closer look at a potential glide path. Again, this is totally customizable. And so let's just take a 36-year-old, for example. If we look at a 36-year-old and go up, that 36-year-old could be an 88% equities, or he could be in 78% equities, just depending on which glide path he's placed on. And a 45-year-old, for example, could be placed on glide path with 75% equities or 65% equities. And so again, this is customizable, but this is just the way that that this particular glide path is showing it. So record keeping fees and services for managed accounts, what it includes is, number one, the creation and maintenance of the web experience, the creation and maintenance of the glide path, the risk tolerance questionnaire, the creation and maintenance of that, and then the annual movement along the glide path for each adopting participant, custom advisor messaging to go to the participant on their birthday, and then allocation adjustments from the advisor as the advisor deems needed. And funds can be changed in and out as needed based on performance of those funds. So the fee for service will be a customized fee charged to all of the individuals who use the model portfolios within the managed account solution. And so we will be able to help with that feeing of those managed accounts. The fee service will be charged to the participant directly and then paid directly to ABGRM as a record-keeping fee. I'm going to show kind of an example of how the managed accounts work and how they're used. And so we're going to go into, hopefully we're going to go into the interface. So after the participant puts in their username and password and gets into it, they will be put into our onboarding process. I've already started the onboarding process to not bore you with entering in the individual's password and their address and phone number and all that. I've gone ahead and done that. This is preloaded, and to the point where the individual then gets to choose how much they're going to contribute from their paycheck. And so let's just say that this individual wants to do 10%, but they think, I'd like to do 4% traditional, get a little bit of a tax break, and 6% into Roth, and then they're going to click next, and then this is going to open up the managed account portion where they will be then taken through, and we've got a mock risk assessment built in here. So they will be taken into the managed account section. They'll begin their risk tolerance questionnaire, and they'll answer questions. These are just ideas of questions. So like, in order to receive long-term average stock market returns of 8 to 10%, I'm comfortable with the possibility of losing 20 or more % in any given year. And I can say, yeah, I agree to that. Next. And let's just say the next question, I'm not so sure. Next. I don't plan to access my money before I retire. I strongly agree. Next. I consider myself comfortable with economic issues. Maybe I'm not that comfortable. Next. And I agree that I can meet my retirement goals based on my current salary and savings outside of the qualified investment plan. I'm not sure. And so then I calculate the results, and it tells me kind of where I sit between conservative and aggressive. What I didn't tell you is that this individual happens to be 37 years old, and it puts them into a mix that's 76.5% equities, 23.5% fixed income. Now, then they read the terms of the agreement, they acknowledge that they've read that and accept it, and then they can review their enrollment. If they want, they can cancel the questionnaire, choose their own investments, or they're given the managed accounts, and if they want to accept that, then they submit, and now they're in the managed accounts. This will now take them to their main screen after they go to their plan dashboard. Then they'll go to so this will take them to the main screen of the website, where they will see, well, first of all, they're going to get a tutorial. So if they want to do the tutorial, they just keep hitting next, and it's showing what the different items within our website are, or they can end the tour, which is what I'm going to do right now. It's showing them what they chose as, for example, their pre-tax at 4%, their Roth at 6% contribution. They can change their contribution rate here. They will see their account balance once they start making contributions. Down at the bottom here in this portion right here, where normally they just see they're going to see the different mutual funds that they've opted into. what they're going to see here is a title that says ABG Managed Accounts, if that's what they've chosen. If they did not choose the managed accounts, if they've just chosen to make their own elections, then they won't see this part that says managed accounts, and they won't see this part that says retake risk assessment. So this is kind of their call to action where they can retake the risk assessment, and it also shows them what their mix is to get them to that 70, I forgot what it was, like 76.5% equities, 23.5% fixed income. So it'll show them what the mix is of the different portfolios that are available to get them to that mix. At any time, they can go in and they can opt out of the managed account system. So that's not a problem. They just have to go to manage investments. And in the managed investments, they can change their elections. And then right here it says leave ABG managed accounts. Or they can retake the questionnaire and stay in the managed accounts. If they leave the managed accounts, it'll tell them that they're doing it, so confirm that. It'll give them what their current investment election is, and they can actually mirror that if they want to and not pay the extra money for the service, but nobody's going to be moving them on a year-to-year basis as they get older. So they would be in charge of it themselves from then on. They can choose from all the funds that are available to them in the plan at that point. And let's just say that they choose instead to be 100% growth. So they choose to be 100% growth, and then they review that election, and they submit it. And now they're 100% growth. Now if they go back to their dashboard, they'll see this big box that pops up that welcomes them and introduces them to ABG managed accounts, where they can learn more about it and opt back into it. Like I mentioned before, down here, they don't see anymore where it says managed accounts. There is no call to action to retake the risk tolerance questionnaire, and their new election is now represented. So just in conclusion, the managed account solution that we're providing is one that an advisor can go in and build build their own by using our people to help them build it. However, you know, for smaller advisors who don't have a lot of business with us, they may want to use our off-the-shelf managed account product instead, which will make it more cost efficient and easier to use. Advisors with larger books of business may get excited about being able to customize their own, be the fiduciary of it, and you know, move on and keep running their own managed account and have access to update that as time goes on. If this flavor doesn't work for you, like we said, in the beginning, we have 3 different options that are available through other providers, and we welcome you to learn more about it, talk with your client service representative, and get more information about the different ones that are available, and then make the educated choice for yourself, whether to use one or not use one, and which one to use. At that, I'm going to end my discussion and open it up for questions. All right, looks like there's no questions, so we're going to end the presentation at this point. Thank you for your attendance and participation.